Why does your profit and loss still lumps your ad spend with your storage fees? And why is your VAT return quietly drifting away from the reality of your actual sales and purchases? I'm Carl from KKG Accountancy. We look after the numbers for e-commerce founders. You installed A2X or Link My Books, you connected Amazon, it pulled your settlements through to Xero, and the numbers look clean. So here's a few questions. Why does your profit and loss still lumps your ad spend with your storage fees? And why is your VAT return quietly drifting away from the reality of your actual sales and purchases? An Amazon settlement contains about 2 weeks of sales, less refunds and fees, all paid out in one lump. That payout almost never lines up neatly with your month end. So if you just booked the gross payout on the day that it hits the bank, you'd be smearing 1 month revenue into the next. A2X fixes that. It apportions each settlement into the right month and it breaks that single payout into its component parts. That's the strength of the bridging software. And if you're on Shopify, the mechanism is very similar. The only difference being that unlike Amazon, which acts as a supplier of record on some sales and accounts for that VAT itself, Shopify treats every sale as your own supply, with the VAT determined entirely by how you configure the store. But here's the part that needs particular attention. A single settlement carries dozens of different transaction types: sales, less refunds, FBA fees, storage, advertising. The bridge software posts every one of them exactly where you tell it to, and at exactly the rate that you tell it to use. So you can only be as accurate as you set it up. So here's where it usually goes wrong. On the default or bulk setup, every cost Amazon throws at you, sponsored ads, FBA fulfillment fees, long-term storage, all gets lumped into one single account, usually called something like Amazon expenses, with the same VAT code applied to all expenses. Not only are you not compliant anymore, but also you can't see your customer acquisition costs or true fulfillment margins clearly. Marketing spend and warehousing all fuse into one meaningless number, and to pull them apart, you're back into the raw Amazon reports with a spreadsheet. The second failure point is worse because it involves HMRC. One tax code applied across genuinely different VAT treatments. Put a standard 20% code on sales that shouldn't carry it, and you over-declared your output VAT, handling HMRC money you never owed. Go the other way and you miss VAT you should be charging and you under-declare. Either way, your VAT returns stop matching the nature of your transactions. Since August 2024, most fees to UK established sellers carry 20% VAT, UK VAT recoverable as input tax, but the treatment is not uniform. Advertising and storage on some non-UK marketplaces and certain FBA fees still fall under the reverse charge. A bulk automap that applies one tax code to every Amazon deduction will misstate the reverse charge items in one direction and the standard rated ones in the other. If the software is mapped incorrectly, then all it does is move bad data around. And that mismatch, the return saying one thing when the sales and purchase data is saying another, is exactly the kind of thing that draws an inquiry. And if you want to check whether this is happening to you, here are 3 quick tests you can do. Open your P&L. If fulfillment and storage sits together in one account, your costs are bundled. Count your sales tax codes. A single code across genuinely different treatments is the warning sign. And finally, a deeper check. Agree your Amazon sales for a VAT period, back to the return, and confirm the output VAT matches the treatment that those sales should carry. How do you fix it? 3 steps. 1. Audit the mapping. Actually look at where each transaction type is posted and what code it carries, and work out how far back it's been wrong, because that tells you whether earlier returns need correcting. 2. Split your cost lines out, so customer acquisition cost and your marketing efficiency ratio, revenue divided by ad spend, all come back into view. And lastly, set every VAT code from the actual treatment, not from a default position. And the treatments really do differ. UK domestic, standard rated, exports, 0 rated, but only if you hold valid proof of export under Notice 703. EU consumer sales may need destination VAT through IOSS. Dim supplier sales where the supplier is treated as going to Amazon, not the customer. And watch your overseas FBA stock. Goods sitting in a warehouse abroad aren't a UK export and may trigger a restoration in that country. Now, if you're thinking that your setup's probably been wrong for a while, don't panic. There's a real difference between an adjustment and a disclosure. And an unprompted disclosure, where you put your hand up first, is treated very differently from an error that HMRC finds. Putting your hand up first protects you. And going forward, your best control is the Amazon clearing account. It should always be reconciling back to the bank. And if a balance lingers there and never clears, that's your signal that something's been missed. The one idea to take away, this software is a bridge. It carries whatever you load onto it, and it carries it consistently, which is exactly why bad mapping is so dangerous. The value was never in installing it, it's in the configuration. Get that right and these tools are brilliant. Leave it on default and you've just automated your mistakes. If you want the full breakdown, the mapping audit, the VAT treatments, the clearing account check, it's all in the article linked below. And if you'd like us to look into your setup, there's a link for that too. Thanks for watching.